Hey traders, it's John Fortune here of this week's weekly Forex Forecast. I hope you're all having a great weekend. Let's start with the US dollar index. I've been bearish on the dollar index for a number of weeks and we had some really good opportunities to the downside, but you can see as of last week, in fact, when we took out the target here of the 89,710 on the 19th of May, we've just moved sideways. And in last week's weekly Forex Forecast, I highlighted the fact we are stuck in a range between the 90.42, which is this low over here, and the targets that we took out from previous videos at the 89,710. Because of this, it meant that for the first time in a while, instead of being bearish on the DXY, I went into last week with a neutral bias on the DXY. We had non-farm payrolls last week as well. And going into this week, you can see not much has really changed. We're still stuck in the range between the 90.42 and the 89,710. And you can see now quite clearly that the channel to the downside that we've been trading over the last month or so has now finished and the DXY is ranging. So very simply put, going into next week, I do go into next week once again with a neutral bias on the DXY until we resolve ourselves out of this range. And all that simply means is I am prepared to trade DXY positions both ways, as I don't have a strong bias on the dollar one way or the other. And the second thing it means is that I would prefer to look for opportunities outside of the dollar pairs once again next week. So if we look at how that range in the DXY translates in euro dollar, you can see we pretty much have the inverse here. We are stuck in a range once again between the 1.2150, which is this high over here, and the targets that we took out in previous videos at the 1.22390, which is a hard resistance area which we've struggled to break above. Now interestingly, although we're stuck in this range, you can see that we have formed a head and shoulders pattern, which was confirmed on the breakdown here. So I would be looking on balance for further declines in euro dollar next week, down to the next key of support to the downside, and the target set in this case at the 1.1996. Now we do look at euro dollar every single week, whether I think it's one of the better markets or not. We do an analysis on it. And in terms of the dollar pairs next week, if we are going to get a bit of dollar strength, I actually think Aussie dollar to the downside and New Zealand dollar to the downside is slightly better than euro dollar to the downside next week. So looking at Aussie dollar next, this is a market I'm going to be keeping an eye on next week. You can see we're stuck between a range of the 0.7782 and the 0.7594. If I zoom out, you can see this a bit more clearer. We've been bouncing from these levels and we're currently coming down from the top of this range. So very simply put, going into next week, you can see we also have some nice momentum in this market. I am looking for lower lows in this market. So since we've already started to pull back, any deeper correction in this market next week will be viewed as an opportunity to look for bearish reversals down to the next key of support to the downside and the target set at the 0.7622. The next dollar pair that I like is New Zealand dollar. New Zealand dollar is structured to the downside and we also have really nice momentum in this market pointing towards lower lows going into next week. We've started to correct, so any deeper correction in this market will be viewed as an opportunity next week to start to look for bearish reversals down towards the next key of support to the downside and the target set at the 0.7071. And the final dollar-based pair that I like going into next week is gold. Now, gold is structured to the upside, which would of course be dollar weakness, which is opposite to what we've looked at so far in euro dollar, in Aussie dollar and New Zealand dollar. But that's actually a good thing because it gives us the potential opportunity to trade the dollar both ways, depending on whether we get strength or weakness next week in the DXY. In last week's video, I noted that we'd taken out the previous target and I was looking for a pullback, and this pullback towards the bottom of the channel is now an opportunity to start to look for long positions in gold. So any pullback towards the 187.334, and this is the key level in this market. If we start to break this and we break out of the channel, this would be very bearish for gold. But any pullback towards this area will be viewed next week as an opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 1933.28. Outside of the dollar pairs, I do think some of the stock indices this week are looking quite good. First and foremost, the S&P 500. Now, last week I noticed we were in this consolidation and we'd broken out of the top of this consolidation, and I was looking for a pullback in last week's video into the 4171.91, and we tested this almost to the point before rallying towards the target. So for anybody not involved in the S&P 500 from last week, any pullback towards this level once again will be viewed as another opportunity to start to look for bullish positions into the next key of resistance, the upside and the target set from last week at the 4270.92. Next is the Nasdaq. Now I do like the way the Nasdaq is setting up because previously we broke out of, we bottomed over here with an inverse head and shoulders. We broke above the confirmation level of the 13,303.79 and we came back and retested this, and it does look like we're going to come back and make new highs in the Nasdaq. So very simply put, we've started to break out of this near-term consolidation. We've got some momentum. Any pullback in this market next week will be viewed as an opportunity to start to look for bullish setups up towards the next key area resistance, the upside and the target set at the 14067.42. And the final stock indice I like going into next week is the Nifty. The Nifty is a market I've been highlighting in previous videos. Ever since we broke out of this inverse head and shoulders, I've been looking for a move into the 15575.30 and the 15660.80. And last week we did achieve both of these targets and we finished the week right at the second target in this market. Having achieved the targets last week, I do still like the Nifty for further advances to the upside. Any pullback towards the 15433.30, which is this major high over here, will be viewed once again as an opportunity to look for bullish setups in the Nifty into the next key area resistance, the upside and the target set at the 15829.15. The next market we're going to look at is crude oil. Now last week we took out both targets to the upside, although I wasn't trading crude oil last week because of this expanding type of pattern we had over here and we highlighted in last week's video. This is usually a sign that you want to be patient and wait because there's extreme indecision in the market. Last week, however, we started to break out of this pattern, and as a result, I am looking for further advances in crude oil next week. So any pullback in crude oil is going to be viewed next week as an opportunity to start to look for bullish reversals up towards the next key area resistance, the upside and the target set at the 70.56. And if we break through here, we're going to be looking up towards target 2 at the 73.12. Now, the other thing to note is as we're seeing strength coming into crude oil, this is spilling over into the Canadian dollar. And we're also, as a result, seeing quite a strong Canadian dollar going into next week. So the first CAD pair I like is Cad Yen. Now, Cad Yen has previously broken out of this pennant type pattern. We came back and we retested previous broken resistance in this market. We have just a continuation pattern. This sideways move is just simply a continuation pattern as it stands. And I am looking for further advances to the upside in this market going into next week. We've already started to pull back towards the bottom of the channel, and as I said, this key area of resistance turning support. So going into next week, this is going to be a great place to start to look for bullish reversals in this market. I'm going to be looking up towards the next key area resistance, the upside and the target set at the 91.56. The next CAD pair I like is Aussie Cad. Aussie Cad is a market I've been highlighting to the downside in previous videos, and we came very close to the target at the 0.9255 highlighted last week. We had a really nice sell-off and we just stopped shy of this target. This rally is really, in my opinion, as it stands, just an opportunity to get involved with this to the downside for anybody not already involved. So any continued correction in this market next week would once again be viewed as an opportunity to look for bearish reversals down to the next key area of support to the downside and the target set from last week, 0.9255. And the third CAD pair I like going into next week is New Zealand Cad. We are trending to the downside and we've broken below key support at the 0.87390, and we're starting to put in a bear flag. Very simply put, going into next week, any continued correction is going to be viewed as an opportunity to look for bearish reversals down to the next key area of support to the downside and the target set, the 0.8593. And the final two pairs I like this week are pound based. Pound yen was a market highlighted in last week's video and we just didn't go anywhere. I highlighted the fact we'd broken out of this pennant and we were forming a large bull flag, and all that happened last week was just a continuation of the correction of this bull flag. So very simply put, any deeper pullback is simply viewed once again as an opportunity to look for bullish reversals in this market up towards the next key area resistance, the upside and the target set at the 156.51. And the final market on my watch list for next week is Pound Aussie. Now in last week's video I highlighted the fact I was looking for a rally in this market, and we did have a nice rally, but we didn't take out the target at the 1.8521. We ended up pretty much going nowhere in this market last week, very similar to Pound Yen. So very simply put, any continued correction once again in this market is still just an opportunity to look for bullish reversals. And I'm going to be looking up towards the next key area resistance, the upside and the target set at the 1.8521. So that is it for me for this week, guys. Those are the markets I like going into next week. Feel free to join me on Twitter for midweek updates on these markets and other markets next week. Apart from that, I want to say a big thank you to everybody who likes and shares and comments on this channel on a regular basis. And a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.